Guys, good afternoon and welcome back. We are back with our fast track course, with our fast track understanding, and hopefully with the fast track marks. Guys, I'm just looping in the Google Drive link here. In case you want to access anything, including the handwritten notes, you can get them here. I have uploaded the DT handwritten notes, the GST handwritten notes. They are being uploaded while we speak, so that is that. Besides that, what's happening today and what are we going to do today? It's a very rainy, nice afternoon, and we are just going to make it even better by completing more and more of DT. Guys, tax is huge, and but if you get the tax philosophy and if you understand that not everything has to be in the exam, you got to score about 55 to 65 to 75 marks. I think that is fairly manageable if you understand the basics well, if they are strong, and if your presentation is good enough. Today's session, guys, we are going to be covering PGBP a little bit, which is left. We will cover that. We will do a very interesting chapter called Setoff and Carry Forward, and we are going to be looking at a chapter called Capital Gains. So this is the agenda for the day. We are going to get better and better in all these three. But amongst these three chapters, guys, I'm going to be surprised if you don't know about it, but set off and carry forward is something that is asked every year, except this time, or I think this time they asked the set off question. We'll check, and when we do this, we'll also see at the May 22 set off question how that was. So that's the agenda. Yes, I think that should cover it all. Yes, perfect. But before that, what are we up to on PGBP front, guys? PGBP front, we finished the entire conceptual clarity of the subject of the chapter, but I just want to show you some exam related questions. So I'm just going to upload something on PGBP front. So here we go. This guys, in PGBP, what are the kind of questions that are expected is what I'm going to just show on the screen. So this first one is a PGBP question. Let's try and see what they're asking you and why are they giving you those 4 or 5 marks here. 4-mark question, guys. Here we go. Everyone, you can participate. Guys, this is a great way of looking at PGBP. In fact, PGBP I put only one sum because generally PGBP does not come as a standalone question. It's a part of a bigger question, and hence PGBP has importance, but of course it's mildly important, guys. Mr. Prakash is in the business of operating goods vehicles. As on 1st April 2018, he had the following vehicles. Guys, he had vehicle A, B, C, D and E. Compute his income under section 44AE, that is always on the expressway. That's a shortcut for 44AE. In case you didn't know, now you know. But guys, here the section is already given. Let's see what is the income. How do we start doing a sum like this? Guys, the heading will be computation of total income of Mr. Prakash for the year AY 1920 PY 1819. Particulars, amount. This is how you start presenting a sum which is asked in the exam like this. Then you will do vehicle wise. As you know, light and medium goods vehicle 8,500 per month or part thereof, and heavy goods vehicles more than 12,000 or 12 tons is basically 1,000 per ton per month. So let's see vehicle A. Guys, vehicle A is 8,500 kg, so it's light and medium. You purchase it on the 2nd of April, so it's the whole year with you. Yes, guys, we don't have to see put to use. We have to see purchase date in this case. So this is basically 7,500 into 12. Anyone with a calculator? Thank you. Anyone with a calculator, you can calculate this and please tell me the number here. Next, guys, vehicle B is a heavy vehicle. So for vehicle B, it is basically 1,000 per ton. So that is 13,000 rupees into 11 months here. So this first one is 90,000. The second one, you can tell me what it is. Third one, guys, this is 12,000. This was put to use. By the way, my mistake, guys, my mistake. Sorry. They have told you to find out for the previous year 1819. For the previous year 1819, all these were for the whole year. I'm sorry. These are vehicles already with you. So I'll do the calculation again. So here this is a light good vehicle, so 7,500 into 12. Of course this does not change anything here, 90,000 remains 90,000. Next for vehicle B, 13,000 into 12. Guys, why am I taking 12? It's 15th May, but this is 15th May of last year. Guys, it continues with us for the whole year, so into 12 is 1,56,000. and this is a very tricky thing, guys. They put 12,000. Now what is 12,000 or what is 12 tons? 12 tons is light and medium, guys. So here it will be 7,500 into 12. Again it will be 90,000. So this is how ICI loves to confuse you. If you're already confused, they will add to that spice of confusion by giving you details like these. Next, guys, is D, where weight is 11,000. You purchased it this year, 18-19. Yes, so this one we will start 7,500 into 12 months. Again 90,000, guys. And last, guys, is E, which is a heavy goods vehicle. So 1,000 per ton, so 15,000 rupees there. Into 11 months, guys. Anyone, how much would that be into 11 months? How much would that be? 15,000 into 11, 1,65,000. Perfect. Once you total up all of this, can someone total up all of this, guys? 90, 90, 90 is 2,70,000 plus 1,56,000 plus 1,65,000. 5,91,000. Thank you, Ajit. Thank you, Rinal. Guys, 5,91,000. Venkat, good job there. 5,91,000 is the total. Have they told us to find out the compute of the total income? Yes, so this is the total income. Under which section? 44AE. Guys, please tell me here, will he have to maintain his books of accounts in this case? Will he have to maintain his books of accounts? No, guys, no maintaining books of accounts. Will he have to get them audited? No, he won't have to get them audited also. So life is very good. Yes, life is very good. Now I'm going to take one step ahead, guys. What if he wants to claim an income lower than this? Can he claim an income lower than this, guys? Yes, he can, but he will have to maintain his books of accounts and get them audited. That is a condition. Perfect, absolutely right. Guys, good understanding. This is a PGBP proper question, guys. Otherwise, PGBP has no standalone questions. They're all part of the first question, which is computation of total income. All right. So if you see computation of income sums, guys, in that you have PGBP every year. So we'll do those sums when we come to that chapter called computation of income. Right now, guys, I just want to show you a flavor. I'm going to add now the module, and we will do the questions at the end of the module only. So here we go. I'm adding the ICI material here. This is PGBP. Instead of doing all the questions which are not really that important, guys, let's attack the questions right in the end. Let's check these questions out and see how well versed we are with these questions. Everyone, let's start. We might not do the entire question solving wise, but we will discuss every part of it. Guys, when a question like this comes in the exam, I don't have the time to read the entire thing. So first I'll read what is asked. Compute the depreciation available to the assessee as per the provision of the Income Tax Act and the WDV of different blocks of assets as on the 31st of March 2022. Assume that it does not opt for 115 BSE. What is 115 BSE? We don't know. We don't care right now. Alright, guys, for each one of them, you will tell me whether I will get depreciation. And I'm into manufacture, so can I get also additional depreciation? So here we go. Let's start. WDO of plant and machinery. Is this the opening block? Yes, this is the opening block. Depreciation including additional depreciation till last year is 4.75. Now, guys, you can make an assumption. Here they have done this minus this is the opening block. So we can also assume, guys, that 30 minus 4.75, that is basically 25.25 is the starting opening. So 25.25 is the starting. Next, new machinery purchased on the 1st of September. Guys, I'm adding 10. Yes. Please tell me, guys, will I get additional depreciation on this? Yes, because it's new machinery, I will also get additional depreciation on this. So I'm just writing in a different, I'm just marking this additional depreciation. Next, new machinery purchased on 1st December. This is 8. I will add this. Will I get additional depreciation on this also? Yes, but this is only going to be for half the year. Next, this done, this done, this done, this done. New computer. Guys, computer is a separate block. So I'm putting computer here because that is a separate block. Just 1 second. Yes, so computer here is a separate block where it is 4. Nothing more has been given here. So this has been purchased and put to use on 3rd of January. So again, half year is what you will get in this case. This is 40% block. Alright, all the assets were purchased by account pay check. Guys, if they were cash, then you will have to disallow anything which is given more than 10,000 per person per day. All assets were put to use immediately. Good. New machinery purchased on 1st December and computer have been installed in the office. Guys, this new machinery on 1st December and this, so again guys, you will not get additional depreciation on this. Excellent, Renath. Good. During the year ended 31st March 21, that is last year guys, a new machinery had been purchased on 31st December for 10 lakh. Additional depreciation has been claimed thereon. Guys, last year, if I installed the machine on 31st October, did I get half depreciation, additional depreciation? So will I get half this year? Yes. So I'm just putting a star. I will get additional depreciation half of last year this year as well. Depreciation rate for machinery is 15%. Let's start calculating, guys. Very simple. 25.25 plus 10 plus 8. What is the calculation here? 25.25 plus 10 plus 8 is 43.25. Now 43.25 guys has to be bifurcated into two parts, half year and full year. So besides 8, so 8 is half year and remaining 35.25 is full year. Guys, please do one depreciation first and then do additional depreciation. Don't confuse the two. Here I will get the full 15% and here I will get only 7.5%. So here 35.25 into 15% is basically 5.29 or 5.2875 if you want to do exact calculation, and here 8 into 7.5 is 0.6. This is depreciation. Let's calculate depreciation on this also. This is basically 20% because half the year, so 4 into 20% basically is 0.8. Guys, did we get all the depreciation? Yes, we have got all the depreciation. 0.8 plus 0.6 plus 5.2875. So basically this is the total depreciation, about 6.6875. Now guys, we need to calculate additional depreciation. Additional depreciation, guys, we will have to calculate. Now let's check on what all we will get additional depreciation on. Only on the orange star, guys. So on 10 you will get additional depreciation. So additional depreciation on 10 full year, so that is 20%, so you will get 2 plus last year's 10. Guys, you got half depreciation last year, so on 10 last year you will get again 10% this year, so 1. So basically additional depreciation is 3. Perfect, that is it. So let's check 6.6875 if they've given the total. I don't know if they've given the total. Computation of depreciation, total depreciation, guys, is here. 1 second. So 25.25 into 15%, 10 into, okay, 5.25. Additional depreciation is right. We've also got 3 additional depreciation. This is 5.29 and 0.60. 5.29 plus 0.60. They've just rounded the number. I also got 5.89, guys. We've also got the same answer. This, if we also add 5.29 and 0.6, we've also got the same answer. Perfect. Just checking, and computer is 8. We've also got 8. Perfect. So guys, we've got the right answer, but as you see, guys, in the exam they don't give questions like this. They avoid questions on depreciation because this question will get 6 marks and they don't have 6 marks to give a depreciation sum. Let's check this, guys, and see our understanding. We'll avoid calculations now for this sum. We will only discuss. Everyone, let's start. Abhimanyu is engaged in the business of generation and distribution of electric power. Guys, can he get additional depreciation as well? Yes. He opts to claim depreciation on written down value method for income tax purposes. From the following details, compute the depreciation allowable as per the provision of the Income Tax Act for the year. So you will write computation of depreciation, etc. Let's start. 50 is the opening block. Depreciation is 7.5. So we will start with 42.50. Next, guys, new machinery purchase, will we add? Yes. Machinery imported from Colombo, will we add? Yes. New computer install, will we add in another block too? Yes. Now let's say which gets half year's depreciation, guys. New machinery has been purchased on 12th October, so yes, half year's depreciation. Sorry, my bad. Here I'll write half year, 1 second. So this is half year's depreciation. Machinery imported from Colombo on 12th of April, so this you'll get full year depreciation, so only one half. And new computer installed on 15 July, again full year's depreciation, so only one is half year's depreciation. Now let's see additional depreciation. Who will get, guys? Will we get on new machinery purchase additional depreciation? Yes. On Colombo, guys, it is a second hand machinery because it has been used in Colombo. Will we get additional depreciation? No. And on computer, will we get additional depreciation? No. So guys, this is what you will calculate. You will total this up. You will separate full year and half year. On this, you will get full year depreciation. So that will complete your depreciation. And on this 10 at half year, you'll also get additional depreciation. I'm not doing the calculation because honestly, it's not important. When we see computation of income sums, you see how depreciation is asked. All right. Examine with reasons, guys. You will do this third question 1 and 2, and once you finish this, I'll put 3 and 4. You get exactly 30 seconds, guys, to do each of them. Over to you all. Whether the following deductions will be given or not, please answer. I've gotten one answer from Akshat. I want others also to answer, guys. First, second. All right. And if you're done with these, also these, and then we'll discuss third and fourth. Third, we won't be able to answer because we haven't done TDS chapter. Alright, let's start, guys. Let's discuss the first one. You've constructed a school building in compliance with CSR. Sorry, for CSR, you don't get the reduction under section 37(1). That's not allowed. Purchase of building for the purpose of specified business of setting up and operating a warehousing facility for storage of food grain amounting to 4,50,000. Yes, you get 100% reduction under section 35 AD, also developed. Next, guys, here. Interest on loan paid to Mr. X, a resident, 50,000, on which tax has not been deducted. The sales for the previous year is 202 lakh. Mr. X has not paid tax, if any, on such interest. Basically, what they are trying to say is that you paid something on which you have not deducted TDS. But were you supposed to deduct TDS is my question. Answer is yes, you were supposed to deduct TDS and you have not deducted it. He's a resident. So you will disallow how much, guys? 30% you will disallow. So 50,000 into 70% you can take a deduction. Yes, 35,000 you can take a deduction. But more on this in TDS chapter. And commodities transaction tax, guys, are you allowed to take the deduction of this? Yes, if this is in your PGBP income. So if he's a dealer in commodities, is he a dealer? He's a dealer in commodities, so that is his PGBP. So can he take the deduction of this? Yes, he can. Alright, moving ahead, guys. True or false, that's what you have to write. 1, 2 and 3, over to you all. Please answer. You get 1 minute to do all these three and then we move to the next page. Please, guys. Alright, first one guys, for a dealer in shares and securities basically means, is this business? Yes, so can he take STT? Yes, he can take STT. This one is true. When a person follows mercantile system of accounting, means accrual system of accounting guys, an expenditure of 25,000 has been allowed on accrual basis, and in later year in respect to the said expenditure, assessee makes the payment of 25,000 through a cross check. Sorry, it is not allowed guys. Cash, cross check, cross DD, bearer check, bearer DDs are not allowed. So this one, because you've already minused it, now you pay through check, so it will be added back. So this one will not be allowed, not allowed. So this one, what are they saying, true or false? But anyways, whatever is the answer guys, it's not allowed. This deduction will be reversed back. Is it mandatory to provide for depreciation? Yes, it is mandatory. The answer is true. Only account pay check or NEFT, RTGS, Paytm, all those are also okay. Guys, last two here, please read and please tell me if that's allowed. Let's read guys. The mediclaim premium paid to GIC by Mr. Lomesh for his employees. For employees guys, any deduction will be allowed. Yes, true, it is allowed, keeping them happy, keeping them healthy. Under 35 DDA, amortization of expenditure incurred on eligible voluntary retirement scheme at the time of retirement alone can be done. No, at the time of payment can be done. Guys, when you start paying, then you will be allowed 1/5 from the year you pay. An existing assessee engaged in trading activities can claim additional depreciation. No guys, trading activities you don't get additional depreciation. Additional depreciation is only given for manufacturing and power generation. Excellent answers. Good. Moving ahead guys, here we are. Examine the reasons the allowability of the following expenses. Guys, here we are. Please read and please tell me if they will be allowed. We haven't discussed this third one, so we'll discuss it when we are here. Alright, let's see guys. First word only is provision guys. Provisions are not allowed. If payment is finally made, then it will be allowed. So this one, sorry, not allowed. Purchase of oil seeds in cash from a farmer on a banking day. Guys, for farmers you can pay cash, no problem, this will be allowed. Tax on non-monetary purposes. I'll give you a very simple example guys. Is your income tax allowed? No. If your income tax is not allowed, then even your employee's income tax that you pay will not be allowed. Payment of 50,000 by using credit card for fire insurance, that is perfectly allowed. Salary payment guys, golden rule, if you keep in mind, you will not have a problem with this. Salary payment of 4 lakh to Mr. X outside India by a company without TDS, this is not allowed and permanently disallowed guys. Payment made in cash 30,000 to a transporter in a day for carriage of goods, that is allowed. Up to 35,000 is allowed to a transporter. So this is the answer guys. Any clarity, please let me know. This they have tried to confuse you that this is on a banking day etc, but to a farmer on any day that is allowed. Perfect guys. This is the kind of questions that you should be able to answer guys, because in the exam PGBP comes like this. They give you different expenses. You should know what is allowed, what is not allowed. All right, true or false, only 3 statements. Over to you all. Please read and please tell me if it's allowed or not. Let's see the first one, guys. Payment made in respect of business expenditure incurred on 16th February 2022 for 25,000 through a cross check is hit by the provision of section 48.3. Absolutely true. Guys, cross check, cross DD, bearer check, bearer DD and cash are not allowed. It is a condition precedent to write off in the books of accounts the amount due from a debtor to obtain deduction for bad debt. Yes, it should be an actual bad debt. So this is true. Next, failure to deduct TDS on the amounts payable to a non-resident on rent and royalty will result in disallowed. Absolutely true, guys. All 3 statements are true. Let's see. This is an excellent question, guys. This is the kind of question that is expected in the exam. All right, guys. What you need to do, guys, here is in a question like this, you need to first go to the last thing, and you need to check what have they asked you as a last resort. So here, you are required to compute the profits and gains of Mr. Shivam under presumptive taxation section 44 AD and as per the normal provisions. So first, guys, we'll do presumptive taxation, which is going to be very simple. Guys, does presumptive taxation depend upon his turnover? Yes. 44 AD, please tell me, guys, first, is he a resident? Maybe. Is he an individual? Yes. Is his turnover up to 2 crore rupees? Yes, his turnover is up to 2 crore rupees. Then can we do 8%, 6%? Yes, we can do an 8%, 6%. Let's see where is he getting the money and how is he getting the money. Assume that the whole amount of turnover received by account pay check. Guys, so the entire amount is received by account pay check. So can I take this amount and can I multiply it by 6%? Yes. So 1 crore 12 lakh 11,000 into 6%, that is 6 lakh 72,690. That is his under 44 AD. This is what his income is on which he'll have to pay tax on. So this is fairly simple, guys. What is more complicated is the normal provisions which they've also asked you. So first you start off with the net profit, that is 50,000. Anything that is wrong or right, you'll have to make adjustments in this net profit. So let's tell me whether it's wrong or right. Is 1 crore 12 okay here? Yes. Is opening stock okay here? Yes. Is purchases okay here? Yes. Is gross profit okay here? Closing stock okay here? Yes. We'll see adjustments, but on the face of it, it looks okay. Gross profit looks okay here. Guys, income from UTI, does it have to be in PGBP? No, guys. It's not supposed to be in PGBP. So what I will do is they've added it. I will remove it. And under which head should I put it? I will put it under IFOS 2400. That I will have to do it here also in presumptive income also, guys. That's only for business. So IFOS I'll have to add separately. So there also I'll have to add. So this adjustment is done. Next, guys, keep reading. Anything which is not PGBP we'll remove. So keep reading, keep reading, keep reading. Salary looks okay. Rent and taxes looks okay. Interest on loan looks okay. Depreciation looks okay. Printing and stationery looks okay. Postage telegram looks okay. Loss on sale of shares, they have minused it. Can I minus it from PGBP, guys? No, I can't minus. So I'll have to add it, and I'll have to write profit loss from sale of shares, short term capital loss. How much is that? 8,100. What to do with it, we'll see. Even here I'll have to put short term capital loss, 8,100. Loss on sale of shares, not allowed, guys. Not allowed as in, Akshat, not getting your question. Loss on sale of shares not allowed. How is that possible? Of course it is allowed. In PGBP not allowed. Absolutely right. Yes. Anyways, sale on shares, buying shares, selling shares is all capital gains. So I'm removing it from this room. Other general expenses look okay. So this is the only adjustment we made. Net profit is okay. Now let's go to the adjustments. Guys, very good adjustment. This one is important. It was found that some stocks were omitted to be included. Now guys, let me give you a very good example of stock. If your closing stock is higher, then your profits will be higher. Please repeat with me. If your closing stock is higher, your profits will be higher. And opening stock is the opposite. If your opening stock is higher, your profits will be lower. So I always like direct relationships. So I'm going to be using this example only. Closing stock is higher, profits will be higher. All right, we'll keep this in mind now. It was found that some stocks were omitted to be included. That means closing stock was lower by 18,000 rupees. If closing stock is lower, guys, profits are also lower. So do I need to increase the profits by 18,000? Yes, I need to increase the profits by 18,000. I'll repeat this one last time. Guys, closing stock and profits have a direct relationship. If by mistake the closing stock is low, then even by mistake the profits will be low, so I'll have to increase it. And if by mistake the opening stock is low, then by mistake the profits are high, I'll have to reduce it by 9,000. Basically give the opposite impact. Yes, give the opposite impact. So don't try to by heart both, guys. Only try and see one, and the other you give the opposite impact. So this is what is opening and closing stock. I hope this is understood. Salary, guys, which you've minused here, this is salary, that is 60,000. It has some problem. Salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. Guys, are you paying excessive or unreasonable to a specified person? Yes. 48.2 says that is not allowed. So have you minused it? Yes. You'll have to add it. Yes, I'll have to add 2,000. The whole amount of printing and stationery was paid in cash. Guys, this is the whole amount of printing and stationery, 23,200. It was paid in cash one time. 23,200. Sorry, that is not allowed. You've minused it. So now what do I need to do? I need to add 23,200. If closing stock increase, profits decrease. No, Venkat, that's the opposite you're saying. Please remember, guys, if you do well in life, will your income go up? Guys, if you do well in life, will your income, do they have direct relationship? Yes. Same way, closing stock and profit have a direct relationship. When they're going up, both will go up. When they're going down, both will go down. By mistake, they've put closing stock down. So by mistake, profits are also down. So you have to increase it. All right. And guys, going to the next, first, second, third adjustment is done. Let's go to the fourth adjustment here. Depreciation provided in the profit and loss account, rupees 1,05,000, was based on the following information. So let's see if the depreciation is right or wrong. The opening balance of plant and machinery, that is written down value as on 31st March 2021 minus depreciation, is 4,20,000. So 4,20,000. A new plant and machinery falling under the same block of was put to use on 1st July for 70,000. So anything that is put to use or purchase, you add. And two old plants were sold on October with 50,000. So I'm minusing this. There is no half year depreciation here. So 4,20,000 plus 70 minus 50 is 4,40,000. Now on 4,40,000, they should have got at least 15% depreciation. 4,40,000 into 15%, that is 66,000. This should have been depreciation. Plus, let's say if there is some additional depreciation, what was this guy into? He's a trader, so he won't get additional depreciation. So ideally, guys, only 66,000 should have been the depreciation. How much have we taken? We've taken 105. Have we taken extra? Yes, there's a mistake, guys. So you will add 105 and you will minus 66,000. Please tell me if this is okay, guys, everyone. Yes, so there's another mistake in depreciation. So we've corrected that mistake as well. Moving ahead, rents and taxes include GST liability of 3,400 paid on 7th of April 2022. Guys, can I take a deduction even for GST? Yes, as long as any taxes, if you remember tree, guys, Any taxes have to be paid by the return filing due date. Is this the return filing due date? Paid. Yes, this is the return filing due date. This has been paid. So there is no problem here. This is perfectly okay. And other general expenses include 2000 paid as donation to a public charitable trust. Guys, we've not done this. We've not done deductions yet. So we'll not be able to do this one. But I know that this 2000 is to a public charitable trust. It's not for business purposes. So I'll have to add 2000. Yes, I'll have to add 2000. That I know. So this I'm adding 2000. So guys, a sum like this is very much possible to be in the exam. What you need to do is start with the final number and just keep making adjustments. And then you get the final number, which is PGBP number. This is one of the rooms. You'll have other rooms also, like IFOS room, like capital gain room, and you total up all the rooms and that should be your answer. In this exam, in this question guys, you will compare 6,70,000 to 690 with this number, and if this number is smaller, then you can take this number if you arrange your accounts and audit your books. Alright guys, that's what they've also done. They've started with this profit of 50,000 and they've made adjustments, all these adjustments. We've also added 18,000 if you remember closing stock. We've also minus 9,000 opposite impact. Yes. Let's check depreciation calculation guys. We've also got 66,000 and so we had to make it 1,05,000, had to make 66,000. Perfect. Guys, over to you all. Question number 8. You all get 2 minutes to do this, everyone. So Quinder, please tell me what will be his total income. Oh, taking note of the following data. Sorry. There is some other question also, but let's just quickly discuss this. He is in the business of plying goods carriages, guys. He owns 10 trucks. 6 are heavy. 15,000 each. He sold one of them. So basically he had 10 trucks. He sold one of them. So it became 9, and then he purchased one of them, so ultimately it was 10. So guys, can he use section 44A? Yes, he can use section 44A. Depending on whichever truck was used for how many ever months, you will do the calculation. Example guys, there were 10 trucks, 6 were heavy. On 2nd May he sold one of the heavy goods vehicles. So guys, 5 trucks was used throughout the year. 1 truck was used till May, so basically only for 1 month. Remaining, of course, 6 are heavy. Then 3 light goods vehicles throughout the year, and 1 light good vehicle purchased when guys? On 6th May, so 11 months. I'm not going to do this calculation guys for you because this is only logical calculation. Whichever you held for the whole year into 12 months, whichever you sold till you sold, you will calculate. Whichever light goods vehicles you had for the whole year, whichever you purchased from the date you purchased, you calculate. So this will give you your 44 AE goods carriage income. But guys, he's also maintained books of accounts, and as per his books of accounts, his income is 12,70,000 minus expenses is 4,45,000. Guys, what if 44 AE says it should be 6 lakh? Can I take 4,45,000? You can take, but you'll have to arrange your accounts and maintain your books of accounts and get them audited. And other business and non-business income will be added to both, whether you calculate or whether you do presumptive. Under both, this will be added. Guys, presumptive is only for one of the rooms like PGBP. So here guys, income from business of plying goods carriages, as per presumptive it is 13,72,500, and as per your books of accounts is 4,45,000. So can you take this? You may take this, but guys, there are repercussions, and 70,000 has to be added to both. All right, everyone, this is the 9th question. We are doing almost every question, guys. I'm trying to give you the confidence that listen, questions are doable, and PGBP is a chapter which is huge, but guys, can be done well. Mr. Raju is a manufacturer. Guys, manufacturer means will he get some additional depreciation? Yes. Now again guys, sales, closing stock, purchase, opening stock, manufacturing, gross profit, all this looks okay. Yes, looks okay. Next, gross profit, dividend, income from agriculture, administrative expenses, all this guys. So we'll always start off with the net profit, that is 5 lakh. Any changes that you and me think are not okay, we'll make adjustments. Let's start making adjustments, guys. Please tell me if this is okay. Is 2 crore 32 lakh okay? Closing stock okay? Opening stock okay? Purchase okay? manufacturing wages okay, gross profit okay. Next, gross profit okay, dividend from domestic companies. Guys, dividend is nice, but dividend is not part of PGBP, so remove it from this room. They've added it, so I will minus it. And which room should I take it? I have to take it under IFOS 15,000. Next, income from agriculture. Guys, this one, agriculture, if you have any income, it is exempt. They've added it, so I am minusing it, 1,80,000. And which room I will put it? No room, guys, because this is exempt under section 10(1). Admin expenses okay. SGST penalty is not okay, they've minused it, so I have to add it. Guys, SGST only interest and late fees okay. GST paid is okay, general expense okay, interest to bank on machinery, term loan, we'll have to see, guys. This one may have some adjustments, we'll have to see. And depreciation, let's see the additional information. If you find something wrong, we'll correct it. Admin charges include 46,000 paid as commission to brother of the assessee. The commission amount at the market rate is 36. Guys, have you paid something excessive? Yes. And have you deducted it? Yes. Nahi karna tha, so you'll have to add it back. You basically have to correct it, so I'm adding 10,000. Next, the assessee paid 33,000 in cash to a transport carrier on 29 December 2021. This amount is included in the manufacturing expenses. Assuming that the provision of TDS are not applicable, no problem, guys. 33,000 for cash for transporter is perfectly okay. You can pay up to 35,000. Guys, these are the questions which come in the exam. You do so much, and these are the questions which will come in the exam, trust me. So be confident about PGBP. A sum of 4,000 per month was paid as salary to a staff throughout the year, and this has not been recorded in the books of accounts. Guys, this is wrong. If you paid salary, you should record it. So 4,000 into 12, that is 48,000. I'll have to minus. Yes, I'll have to minus. Bank term loan interest actually paid up to 31st March 2022 was 20,000, and the balance was paid in November. Guys, interest to a bank has to be paid. Show me the money. So out of 60,000, you only paid 20,000 till this date, and after that, till return filing due date, you could have paid, but you paid in November. So that 40,000 will not be allowed this year. When it will be allowed? Next year, because you paid in late. So 40,000 I'll have to add back. Housing loan principal repaid during the year was 50,000 and relates to residential property acquired by him for self-occupation. Interest on housing loan was 23,000. Housing loan was taken from Canara Bank. These amounts are not dealt with in the profit and loss account given above. Perfect. You don't have to deal with in the profit and loss account. Guys, housing loan principal etc. you get a deduction under 80C. Next, for housing loan interest you get a deduction under 2024B, but all this is not in PGBP, so anyways they've not put it in PGBP, so no impact. Depreciation allowable under the act is to be computed on the basis of the following information: WDV less depreciation last year. So 14 lakh minus 2 lakh 10 is 11 lakh 90 is what we start off with. Additions during the year, full year 2 lakh, and total additions basically 2 more lakh, but that is half year. So this is half year. Ignore additional depreciation. Okay, we'll ignore it. 11 lakh 90 plus 2 lakh is 13 lakh 90, on which you'll get full year's depreciation, on 2 lakh half year's depreciation. This is plant and machinery 15%. So on 2 lakh into 15% divide by 2, that is 15,000 here, and on 13 lakh 90 you'll get 15% depreciation for the whole year, 2 lakh 8,500. And if you take both of these guys, you will get your depreciation, that is 223,500. But how much have we minus, guys, in depreciation? 223,500, and we minus 2 lakhs, so we'll have to correct it. You have to add 2 lakhs and you have to minus 223,500. Guys, these are examples of adjustments that you have to keep making to get your final number, guys. This is what is the final number. They've also taken 5 lakh and they've also made all different adjustments. Depreciation also 2 lakh. What they minus in depreciation is also the same, 2 lakh 23,500. So this is how you'll get your final answer and your total income. Guys, I want to show you something very interesting. Please check this question. Question number 10. Mr. Tenzing is engaged in the composite business of growing and curing coffee in Kurg, Karnataka. The whole coffee grown in plantation is cured. Basically, they are only growing and curing, nothing else. So, is this composite income? Yes, coffee is composite income. How much of that is PGBP, guys? 25% is PGBP. How much of that is agriculture? 75, of course, is agriculture, which is exempt. This is under a rule called Rule 7B. But what do you have to split? You have to split the profits. Good, Venkat. You have to split the profits. So let's split the profits, guys. First, sale value, 22 lakhs. Next, expenditure for curing coffee, 3 lakh. Can I minus that? Yes. Expenditure for growing coffee, can I minus that? Yes. Depreciation on machinery, 15 lakh into 15% is 2 lakh 25. Can I minus that? Yes. And on 3 lakh into, this is again car, so 15%, so 45,000. Can I minus that? Yes. Besides being used for agricultural purposes, the car is also used for personal purpose. So guys, for car, 45,000, 20% is personal, so I can only take 80%. So 45 into 80% is 36,000. So we can only take 36,000. The expenses incurred for car running and maintenance are 50. Can I minus 50? No, I can take only 50. Is 80%, which is 40,000. So these are all my expenses. 22 lakh minus 3 lakh minus 3 lakh 10 minus 2 lakh 25 minus 36 minus 40. I was just showing you the calculation. 3 lakh 10, 40, 36, 3 lakh, 2 lakh 25, which gives you 12 lakh 89, which is split between PGBP and agriculture. Perfect, guys. This is how a question is asked. A very similar, oh, this is the end of it. Yes, a very similar question was asked in the May exam. I'm just showing you that question. Here we go, guys. One very nice question came from this composite income concept in the exam in May. I want to show you that question. Yes, guys. Mr. Kabra is engaged in the business of growing and curing, further processing coffee in the state of Karnataka. The whole of coffee is only cured. So 2575 here also, guys. Yes, 2575 here as well. Guys, sale value is 22 lakhs. Almost similar numbers also, guys. This is 22 lakh. Will you minus 3 lakh? Yes. Will you minus 3 lakh 10? Yes. Will you minus depreciation on this? Will you minus depreciation on this? Yes. So these are 4 expenses. The car is used for agriculture operation and the machine was used for coffee curing. So there is no bifurcation between agriculture and personal. Compute the income, guys. You'll get the income and that you need to split. And this is how easy this question was in the exam for 4 marks. It is not even as difficult as the exam question, guys. This is so simple. This one is for 4 marks. You will split it. You will get PGBP income and you get agriculture income when you split. Also, guys, WDV is normal. Whatever depreciation is there, you can minus. So from 3 lakh, you will minus 15%. That is your WDV. On 15 lakh, again, you will minus 15%. That is your WDV. Alright, and with that, guys, I'm putting this chapter to a really nice end. PGBP is done and dusted according to me. Guys, now in just about 5 minutes or 3 minutes, we'll start a chapter called Setoff and Carry Forward. I'm keeping a 2-3 minute break so that you are refreshed. You come back and we attack this chapter. This chapter, guys, is asked every single year. So brace yourself. In 2-3 minutes, we will start. It's right now 56 minutes into the lecture. Exactly in 1 hour into the lecture, we will start Setoff. Setoff and Carry Forward should happen very comfortably in this session and capital gain in the next one. We'll be back. Thank you. Hi guys, welcome back, and looking to start a new chapter which is called Set Off and Carry Forward. Honestly, not just you, everyone gets so bothered by PGBP and capital gain and salaries that we forget that there are chapters like these, like Set Off, which are so nice and so easy and get you so many marks in the exam. So I'm going to start off with that chapter. It's a very, very easy chapter. And with the shortcut that I will give you, if you already know the shortcut, it's good to revise. If you don't, I will give you some really, really amazing shortcut to get a very good hold of this chapter. Let's start and see what we are up to in this chapter. Guys, the government likes to tax our profits. If we make a profit of 100 rupees, the government says, I want to tax you. This is your money, but this is also my money. So they want to tax our profits. But if you have a loss of 20 rupees, from another business but under you only, then the government is very sympathetic about it. They say, listen, I understand you have made a loss, so I want to give you a deduction or a set off, they call it, and they will tax only rupees 80. This is called setting off, and so you'll end up paying tax only on 80. So is that good? Yes. Honestly guys, losses are not good, but because they can be set off, it's a good thing sometimes to have a loss because you like to pay lesser taxes. So obviously, will you aim to make a loss in life? No guys. Please don't say this to anyone, including your parents, that losses are good. Losses are really bad, but sometimes they help you reduce your taxes like this. But sometimes, let's say you're like Air India, where you make 100 rupees, but your loss is 120 rupees. So can you minus 120? No, you can't minus. So you'll only minus 100. Or actually you will minus 120, that the extra 20 will be carried forward and set off next year. So this is called carry forward. So one happens in the same year and one happens in the subsequent years. So this is the difference between the two terms, set off and carry forward and set off. Alright. Now the entire set off chapter is focused on losses guys. Only if you have losses will you be able to set it off, and only if it's not set off you will be carried forward. So it's basically focus is on losses, and I use the example of a blood bank where loss is equal to a blood requirement. So loss is a blood requirement. Basically this is a shortcut which you will get to know in this chapter. I'll tell you what happens here. First, the focus should be on the losses. If there are two people, one is loss making and one is profit making, you will not focus on the profit making, you will focus on the loss making in this chapter. That means a blood bank will focus on those people who require blood. Alright. Now, when you require blood, who are the first people you go to? The first people you don't go outside your family. The first people you go to are your family members only. So you basically go within the family to your mother, to your father, to your siblings, your children, etc. and you ask for blood. If they are able to give you blood, whatever you need, then you will not even bother going outside. But if your family is not able to give you all the blood or any blood, and you still have some requirement, then you will go outside. So that is step number 2, where you knock in your neighbors' doors. Guys, you currently have 4 neighbors, you are the one, and there are 4 other neighbors. So there are 4 doors you will knock. One by one you will knock those doors and you will ask them to give you blood. If they can give you blood, great, but if they can't give you blood, then you will be slightly disappointed, but no problem. You will come back to your house and you will wait for your family members again to give you blood. So this is what step 1, step 2 and step 3 is. While step 1 and step 2 happen in the same year, these two happen in the same year, that is the previous year. Step 3 happens in subsequent years. So I'm writing S years. S years basically means subsequent years. While you set off within the family, that means within the head, it is called intra-head adjustment. It is called intra-head adjustment. Basically, when house property goes within house property only, it's called intra-head adjustment. And when you go to other heads, it is called inter-head adjustment. Basically, when house property knocks on the door of salary, it is called inter head adjustment. How do you remember intra and inter? Of course, you know GST, guys. You know what is inter and you know what is intra. So step 1, step 2 and step 3. Can I straight go outside? No. Can I straight go to step number 3? No, you have to follow this pattern. First step 1, then step 2 and then step 3. This is like your foundation, and then right now inter, and then very soon CA final. Alright, so this is Setoff and carry forward chapter, the starting of it. Now let's try and see how this works in real life. In real life, there could be a person called, let's say, Mr. S, and he can have different heads of income. He can have incomes as well as losses. Let's check, but focus only on losses. Guys, in salary, a person can have salary income, but that person cannot have a loss. So here, will there be any blood requirement? No, there will be no blood requirement under salaries. If there is no blood requirement, will you ever go to a blood bank? No, you will never go to a blood bank. Next, under the head house property, can you have a loss? Yes, your LOP can be a loss. There can be a loss from house property for LOP also, and there can be a loss from house property from SOP also. In fact, SOP is all about making losses only. So can you have losses here? Yes, you can have losses here. So this is somewhere you can have losses. What about business? What about PGBP? There are 3 kinds of businesses that you saw yesterday only, guys. In PGBP, there are 3 kinds of businesses. One is normal business, one is speculative business, and one is specified business. You know, specified business is the 100-bed hospital, etc., 35 AD. Speculative business is any intraday transaction, but derivatives, futures, options, hedging, etc., are all normal business. Unacademy is normal business. Ola, Uber, all of these are normal business. So normal business, can it have a loss? Yes, it can have a loss. Speculative business, yes, a lot of times it has a loss. And specified business also, you can have a loss. So these are 3 losses that you can have. But guys, this speculative business is a unique blood, and so is specified business loss. So these are unique. Unique basically means they are such a blood group that they can't mix up with anyone else. Can they mix up with each other at least? No. This unique is different from this unique. Next is a chapter called capital gains or capital assets, guys. In capital asset, can you have a loss? Yes, you can have a long-term capital loss, or you can also have short-term capital loss. Now guys, we haven't discussed this chapter, so do you know what is long-term, short-term? Even if you don't know, doesn't matter. If you hold the asset for long, it's long-term. If you hold the asset for short, it's short-term. That's how you have to remember it. Long-term capital gain has unique blood. What is unique blood? It's a unique blood basically which doesn't mix or doesn't take any other blood except its own. And guys, in IFOS, generally you don't have any losses. IFOS is all about dividend income, interest income, etc., where you don't have any losses. But here, there could be a loss from one income. What is that income? That income is owning and maintaining race horses. Guys, let me differentiate between betting on race horses and owning and maintaining race horses. If you go to a race course and if you bet on it, that is basically betting on race horses. There, the government says, listen, if you win, you'll get winnings on which we want to tax. If you lose, we won't give you any deductions. But this is owning and maintaining race horses. This is different. This is the person who maintains those horses which run. I'm going to call it horses business only. And can you have a loss here, guys? Can you train your horse really well, but instead of running forward, what if it starts running behind, guys? What if it's a crazy horse? Then in that case, you can have a loss. But again, that horse is also unique blood. So there are basically 4 unique bloods. Yes, there are 4 unique bloods. Now, let's focus on the losses and let's look at step number 1. Step number 1 is when you go within the family. So let's see, can you apply step number 1 in these cases? For salary, can you apply step number 1? No, you don't have to, because they don't have any loss. And if you don't have any loss, then no steps will be required. Life is good, no steps required. What about house property? Can you have here Losses, yes. And can you go within the family? Yes, you can go within the family. That means if one property is in loss and the other property is in profit, can I set off against each other? Yes, I can. Now guys, PGBP. In PGBP, you have 3 different members in the family. Can they go to each other? Yes, they can go to each other, except this is a loss. This loss cannot be set off against other profits. Let me explain, guys. Unique blood cannot involve itself with other normal blood. So this is 1 lakh of profit and this is 40,000 of loss. Is there blood requirement? Yes, there is blood requirement. Is there blood in the same family? Yes, there is 1 lakh. But can I go to it? No, because I am unique blood, so I cannot go to anyone else. What if this one also had profit of 50,000? Even then I can't go because I need my own unique blood. So in case of PGBP, guys, can you go within the family? Yes, except the unique blood, they can't go within the family. They don't talk to people in the family also. What about capital asset? Same thing, guys. In capital asset, can you go to each other? Yes, except long-term capital loss cannot go to short-term. Example, if this is a loss of 40,000 and there is a profit of 50,000, can they be adjusted? No, because that is unique blood, guys. Unique blood means so unique that you can't go and talk to your family members also. And last, in IFOS, in horses, if I have a loss of 40,000 and if I have dividend income of 1 lakh, can I adjust it? No, again, because horses is unique blood, I cannot make any adjustments in this case. Guys, one more thing before, so this is step 1. Step 1 is done, complete. So in step 1, you just ensure that unique blood cannot go to each other. Within the family also, no. And guys, remember, on casual income is like your KBC income or your horse betting or any betting, lottery winning, etc. If you've gotten lucky, the government also wants to get lucky. I hope you remember the shortcut. That means if you won 1 crore rupees in a horse bet or in a lottery, then the government does not want you to deduct anything from that 1 lakh, no expenses, no setting of losses, nothing. So in the exam, if you get some casual income, let's say 10 lakh rupees, then just put it in a box because you know you have to tax it. So this one will get no set off of losses. This is step 1, guys, within the family. Guys, this is a very practical sum in the exam. There are no theoretical questions on this chapter, only practical questions. So this is step 1, where you go only within the family. Guys, right now I have not stepped out of my house. Step number 2. While this was only within the family, this is when you start knocking on outsiders' doors. So let's see if you can knock on other people's doors. Let's use a different color font for step number 2. Guys, will I have to go and knock other people's doors in step number 2? In salary, no, because I don't have a loss. So why will I knock anyone's doors? I don't require blood. In house property, can you knock the other doors? You have 4 doors, 1, 2, 3 and 4. Yes, you can. But so you're friendly. Yes, you're friendly. You can knock any doors, but you're shy also, guys. That means you're a little friendly, but you're a little shy also. That means, guys, if you have a loss, can you set off from other heads like salary, like PGBP, like capital gain, like IFOS, except casual income? Yes, but maximum you can take is only and only 2 lakh per annum. It's not 2 lakh per head, guys. It's 2 lakh overall. So what if your loss is 2 lakh 20 and you have a salary of 10 lakh? Can I minus 2 lakh 20? No, you can only minus 2 lakh. So what about the 20? We will see. But guys, this is called friendly but shy. It's friendly, so you can knock on any door. Yes, guys, it can knock on any possible door. 4 doors, it can knock on any door except casual income. No one can knock, guys. And maximum 2 lakhs, so hence friendly but shy. Why shy? Because they can take only blood worth 2 lakh. Next, PGBP. Guys, PGBP, can it have losses? Yes, normal business can have losses. Kingfisher Airlines. Speculative business can have losses. So many day traders and specified business, hotels, etc. can also have losses. So in that case, guys, can they knock on outsiders? Can they knock on outsiders' doors? First, they are semi-friendly. What do you mean by semi-friendly? they don't talk to salaries. They've had a fight over some issue, they've had a fight, guys, so they don't talk to each other. So how many now doors remaining? One door remaining, second door remaining, third door remaining. Can they knock on these three doors? Yes, they can knock on these three doors, except, guys, no one can knock on casual income. That you know, that I'm not going to repeat, that is by default. No one can knock on casual income. So it's semi-friendly. Why semi-friendly? Because they can't knock on salaries doors. That is one thing. Second, guys, if this speculative business and specified business loss, if they are unique blood and they can't go within the family, can they go outside even to those three heads? No, they cannot. All right, so this one is basically, guys, a loss. They can knock on any head, guys. Which can they go for long-term capital gain? Can they go for dividend? Can they go for interest? Yes, they can be minus from every income. So will you focus on the income? No, you will focus on the loss. Again, repeating, guys, can salary have any loss? No. Can house property have any loss? Yes. Can it be minus within itself? Yes. Can it be minus from outsiders? Yes, except maximum 2 lakh. Can it be minus from dividend income also? Yes, but maximum up to 2 lakhs. PGBP, can it have a loss? Yes. Can it go within the family? Yes, except unique blood. And can it go outside? Yes, but semi-friendly. That means salary it cannot knock. The others it can knock. Yes. Alright. Akshat, just one small tip I want to give you, that don't try and see what you can take. Just try and focus on the person who has the loss and define the restrictions. I feel that's a much easier way to look at it. So ask yourself who has the loss. And the loss, let's say, is a normal business. So they can go to anyone. Yes. Now, can they go to capital gain? Can they go? Don't think like that. They can go to anyone except salary. And anyone means anyone then. Dividend income also, interest income also, capital gain also, anything. Perfect. All right. So guys, that is semi-friendly, guys. Please remember the shortcuts. This is semi-friendly. And if you are unique blood, you are so unique that you can't go to a family members. How can you go outside? So you can't go outside as well. Next, guys, we come to capital asset. And guys, capital asset can also have losses. Yes, it can also have losses. Only unique blood can stay to themselves only. Yes, unique blood can only stay to themselves. All right. Guys, capital asset, can it lead to losses? Yes, it can lead to losses. Of course, guys, we've all heard of people who made loss in share market. So this is a capital asset and this has long-term capital loss, short-term. Can they go and knock on any of the doors? No, guys, they are non-friendly. That means they are the snob family. They are that family who thinks that they are too good for everyone. So they don't talk to anyone. No. Salary? No. House property? No. PGBP? No. IFS? No. They don't talk to anyone. Very, very snobbish family. They don't talk to anyone. So then how will they get the blood requirement? Only within themselves. And even within themselves, guys, long term is unique. So anyways, it cannot go even within themselves. So this is capital asset. This is loss from capital asset. This is non-friendly. And in IFOS, can you have losses? No, guys, you can't have losses. Except horses, you have a loss. But that you cannot go to anyone because it is unique blood. Unique blood basically means you need your own blood. All right. Guys, have you ever seen Indians, or if you have friends who are abroad, you know what we are do? When an Indian goes abroad, he'll only be found with other Indians. You check that out. If a friend of yours goes to any university abroad, they will hang out only with other Indians. Same is this case, guys. These are all unique blood. They will only hang out. They will only and only talk to people who are the same blood group, no one else. So imagine there are 4 unique blood groups. They will not talk to anyone else. Guys, just a couple of things. In outsiders, you can take losses. Yes, but first you have to go within the family. Only then you have to go outside. Only then you have to go outside. Alright, anything else? Just one second, let me check. Step 1, step 2. Yes, like I told you guys, no one can touch casual income. So casual income is already in a box because it is already subject to tax. And last step, guys, is step number 3. I'm using a green ink this time for step number 3 because this is back to your family. But guys, this is not happening in the same year. You are carrying it forward. Guys, if you want to understand what is carry forward, please tell me. After dinner, guys, if someone gets food home, or let's say you guys are very full, you had a very big dinner, and someone sent a nice cake, and you don't have any space in your stomach, will you throw away the cake? No, you'll keep it in the fridge so you can consume it later. Same way, guys, this is carry forward step 1, where first your family you went to loss, they did not have blood. Second, outsiders you knocked, they did not have blood, or they could not fulfill your entire requirement. So then can you carry it forward? Yes, you can. But guys, whenever you carry it forward, can that cake be eaten next day? Yes, that cake can be eaten next day, but only up to some amount of days. You cannot eat that cake after 5, 7, 10, 15, 20 years. It is only basically leftovers. Yes, it can only be used for some days, like 8 days, 4 days, etc. We'll see the number of days this can be carried forward for. And also one more thing, guys, whenever you carry forward any loss, you need to call them and you need to stamp their hand with a quarantine stamp. Right now I'm in an office, and my neighboring office guy, I didn't see that person come to office for a couple of days. So I asked someone what happened to him, and they said, listen, he has some viral fever, so he's not come to office, he's quarantined himself at home. So please tell me, when you have a quarantine stamp, do you have to sit in your house only? Yes. So the moment you are carry forwarding in step number 3, are you within your family? Yes. Can you talk to anyone outside in step number 3? No, guys. In step number 3, you can't talk to anyone. You are going to be within the house. Yes. You're going to be indoor only. Yes. You have the quarantine stamp. Don't break the stamp, guys. Only one person breaks the stamp, which we will see soon. So here we go. Let's see. Guys, salary. Will we have to ever go to step number 3? No, guys. House property. Can we go to step number 3? Yes. If first step is not enough, second step is not enough, then you can continue with step number 3. So you can continue with step number 3, but you have to be within your family only. That is obvious, guys. So I'm going to put a bracket here. You have to be within your family only. That's a quarantine stamp, or better, I'll write QS. And how many years can you carry it forward? This, guys, all losses can be carried forward for 8 years subject to exceptions. So how many years can you carry it forward? 8 years. What about normal business loss? Can you carry it forward? Yes, but quarantine stamp. This, can you carry forward? Yes, quarantine stamp. This, quarantine stamp. This one, quarantine stamp. Anyways, they already have a quarantine stamp because capital gain cannot go outside. And guys, horses also, can you carry forward? Yes. So all carry forward, guys. Do you see a QS? QS means a quarantine stamp. All right. That means, can you carry it forward tomorrow, next year, next to next year? Yes. You can minus the loss next year, next to next year. But guys, here everything is 8 years, except the government does not like 2 incomes or 2 losses. One is speculative. They feel this is bad for the economy, and hence they only give 4 years here. And horses, guys, again they give only 4 years. 4 years give means, guys, if you carry it forward next year, then next to next year, then 2 years later, and then last is the 4th year. After that, if you don't eat the cake, it's gone, you'll have to throw it, guys. Else everything is 8 years. Yes, but this specified business, guys, the government loves, because they only told you to start that hospital. So that one is indefinite, guys. I'm just writing U. U means unlimited life. That means specified business, can I take it carry forward next year, next to next year? Yes, it has unique blood, but guys, it can be carried forward for unlimited number of years. So this is step 1, step 2 and step 3. Are there sections? Yes. Step 1 section is section 70. Step 2 section is section 71. And step 3, guys, has all different sections. If you want to remember, you can. It starts at 71B, 72, 73, 73A, 74 and 74A. If you want to remember, you remember, guys. Otherwise sections are not important. How I remember it, I'll tell you. Maybe you could use the same. The house number is 71B. That's how I remember house number 71B. And then everything is then after that. So this is 72. This is 73. This is similar to 73A because both are unique. So 73 and 73A. Both of this is 74 and this is 74A. That's how I remember it, guys. Again, word of caution, if you don't remember the sections here, no problem, as long as the concept you should know really well. Alright, so quick recap guys. Do you remember the 4 unique blood? Do you remember the 4 unique blood groups? Yes. And if any of these 4 unique blood groups are there, will they talk to anyone else? No guys, they are like Indian students abroad. They will only wait for the other Indian students. Next, do you remember guys which head is friendly but shy for outsider knocking? Do you remember which head is semi-friendly, and do you remember which head is non-friendly? And then guys, do you know what is a quarantine stamp? Is it used in step 1? No. Step 2? No. Only step 3 has a quarantine stamp. That means guys, you might have profits outside. You will be tempted to go outside, but you can't go outside. Guys, in quarantine, I don't know if you had COVID, but I had COVID. You are so tempted to go out, but you can't. So same way in step 3, you are tempted to go out, but you can't. And in step 3 guys, you can carry them forward for 8 years, but for the ones they don't like, 4 years, and for specified business, unlimited number of years. But guys, you can carry them forward. Okay, we'll talk about those things in some time. So this is what it is. Please tell me guys, is that a benefit to carry forward? If that cake can be put in the fridge guys, is that a benefit? So for capital gains, no intra-head set off at all. Yes, you can. For capital gains, you can set off in an intra-head. I'll just change the ink here. This short-term capital loss, let's say, is 40,000. And long-term capital gain is 60,000. Can you set off? Yes, you can set off. All right. So only long-term capital loss is unique blood. All right. Interhead they can't. They don't talk to anyone. So interhead they can't. All right. Coming back guys to my question, please tell me step number 3. Is this an advantage to carry forward? Yes. The government says, listen, I'm giving you a huge advantage to carry it forward. But because I'm giving you such a huge advantage, please make sure you file your return of income within your due date. That means you can't be late. No, you can't. You have to file your return within due date. That is what is basically, if they are giving you a benefit, even you have to do something. You have to file your return on time, except for house property. There are 2 exceptions. House property, even if you don't file your return, it's okay. And unabsorbed depreciation, even if you don't file your return or you file it return late, it's okay. So these 2 they will give you anyways, because they are very happy that you bought a house, and they're very happy that you bought assets on which there is unabsorbed depreciation. So these 2 they will give you even if return is filed late or even if return is not filed. The others, they will not give you the carry forward option. Set off you will get, but carry forward you will not get if you file your return late. Example guys, let's say for 2021 and 21-22, this year I had a loss of 100 and I filed my return on time. Can I carry it forward to next year? Yes. And the next year I had a loss of 60, but this time I filed it late. Can I carry 160 ahead? No. 60 you will not be able to carry forward. 100 no problem, because 100 belongs to this year, which year you had filed it on time. So 100 you can carry forward. The year you do the mistake, that year's profits you cannot carry forward. I hope this is understood guys. This small little concept, I hope this is understood. All right. Any other concept which we need to discuss? Yes, there is something called unabsorbed depreciation. Guys, depreciation is basically a PGBP concept. Depreciation comes from PGBP. You know, yesterday we saw depreciation, additional depreciation, etc. All that comes from PGBP. So if your PGBP profits are 100, but your depreciation is 120, then the government says you can only minus 100, and the 20 rupees will be called unabsorbed depreciation. Guys, the government is very happy because you get unabsorbed depreciation only when your depreciation is very high. That means only when your asset purchase is very large. So the government says, don't worry, this unabsorbed depreciation you can carry forward unlimited number of years. So one is advantage guys. I'm just writing the advantages of unabsorbed depreciation here on the side. Guys, unabsorbed depreciation can be carried forward for how many years? Unlimited number of years it can be carried forward. One advantage. And second advantage guys, it is coming out from PGBP. So ideally it is semi-friendly. And even if it's carry forward, generally guys, carry forward have a quarantine stamp, but unabsorbed depreciation is that one guy who breaks the quarantine stamp. Please tell me guys, when you go to the next years, does everyone have a quarantine stamp? Yes, this guy breaks the quarantine stamp. So even when it's carried forward, can it go to any of these doors? Yes, except salaries guys. Salaries they cannot knock, because they don't talk to salaries head. Some more small points guys, I'll finish them in this page only guys. If the income is exempt, does the government get any benefit guys? If your income is exempt, does the government get any benefit? No. Like agriculture income, does the government get any benefit? No, only the farmers get the benefit. So if from that agriculture you have a loss, will they allow you to set off or carry forward? No. So this is basically give and take. If you're not giving any tax, why will they give you set off? So I'm giving you examples guys. Please tell me, can I set that off? Loss from agriculture operations? No. Loss from partnership firm? No. Loss from HUF? No. So if the income is exempt, the loss cannot be carried forward guys. This is a give and take relationship. If you do bad, you'll get karma to come back to you. So same way here also, if your income is exempt, then your loss also cannot be set off or carry forward. Next, yes guys, first you will do clubbing of income. In the steps, you have 5 heads of income. All the 5 rooms will open up, people will come out. Then you will do first clubbing, and then you will do set off. Basically that means if a minor child's income has to be added, first you will add and then you will set off the losses. Okay guys, this business is discontinued. Let's say I have 2 businesses guys. I am into education and I have a CA firm. Let's say the CA firm is making losses, or let's say it's a proprietary, I'm a proprietor and it's making losses. Can I shut that business guys? Yes, only a fool will continue doing the business if it's into losses. So let's say I have 2 businesses. One is education, one is CA, and in CA I'm making a loss. Let's say the loss is 10 lakhs. Can I shut this business entirely? Yes. But what about this 10 lakh? Can I, even after being discontinued, can I set it off in this year? Yes. And if I can't set it off this year, can I carry it forward? Yes, again, but 8 years? Yes, only for 8 years. So that means guys, discontinued business is also like normal business whose losses you can set off. There is no problem for discontinued business. Anything else? Anything else? Last thing guys, there is an order of eating chocolates from your fridge. Guys, there are 3 chocolates in your fridge. How will you eat it? Guys, there is one chocolate which expires tomorrow. There is another chocolate which expires after 10 days, and there is one chocolate which never expires. Which one will you eat first? The one which expires tomorrow you will eat first. Then if you have the hunger, which one will you eat next? The one which expires in 10 days, you will eat that one. And after that you will eat the one which has no expiry. Same way guys, if this is your profit, only in PGBP guys this order is important. If this is your profit of 100, first, is there any order? Yes. First you will minus all current year expenses. So current year first, let's say current year is 20, so you will minus that. Yes. How much remains? 80. Now from last year, can you have some carry forward losses? And can you also have unabsorbed depreciation? Yes, 2 things can come from last year, carry forward or losses and unabsorbed depreciation. Which one will you minus first guys? Let's say there is carry forward of loss of 70 and there is unabsorbed depreciation also 70, or let's say unabsorbed depreciation is 75. This is carry forward of loss. Which one will you minus first? First will you minus 70 because it has an expiry. Then the balance will be used for unabsorbed depreciation. Guys, this is the order of Setoff. Again, I repeat, there's an order of eating chocolates from your fridge. Same way, there's an order of Setoff also. The first Setoff of, or the first minusing you will do of current year's expenses. Once you finish that, you will do last year's carry forward of losses which are expiring sooner. The sooner they expire, the more you take. And then last, you'll take something like unabsorbed appreciation. And guys, the same impact that you give to unabsorbed appreciation, that is unlimited carry forward, it can break the quarantine stamp. The same impact you also have to give to unabsorbed scientific research expenditure and unabsorbed family planning expenditure. That means, guys, if you remember scientific research expenditure, you writing checks, family planning expenditure, can that also be unabsorbed? Can that also be excess over your profits? Yes. So can you carry them forward? Same like UAD, not important, but I'm just telling you the same impact will be given to these also. Example, I'm just giving you an example. Let's say your profits this year was 100, but this year you had scientific research expenditure of 120. Can you minus 120? No, you'll minus only 100. So what about that 20? The 20 is called unabsorbed scientific research expenditure. Can I carry it for next year? Yes, you can carry it for unlimited number of years. One advantage. Second, does it have a quarantine stamp? No, it can go and set off against any head except salaries. Same impact like unabsorbed appreciation is also given to unabsorbed scientific research and unabsorbed family planning expenditure. Alright, and with that, guys, we've completed the entire chapter. In half an hour, we've completed the entire chapter, and now whatever time is remaining, we will only and only do exam questions and module questions from this chapter. Alright, so I'm just opening up to the module first. Here we go, set off and carry forward of losses. Very important, guys, chapter. This is the overview of the chapter. Let's do every question, guys. Loss from one house property can be set off against income from another house property. True or false, guys? True. Loss from one business, say textile business, can be set off against income from any other business, say printing. True. Guys, participate for best benefit and for me to know how much you understood. Alright. Guys, this is Mr. A. Compute the total income. They will never in the exam say that set off loss, etc. The moment you see losses, you know you have to set off. This is A, guys. Income from salary 4 lakh. It's computed. Yes, it's computed. Next, loss from self-occupied property. So this is house property, and is there a loss? Yes, 70,000. Have they computed it? Yes. Loss from let out property, how much is that? 1,50,000. So 2 losses here, totals up to 2,20,000. Business loss, assuming, guys, it's normal business loss, 1 lakh. Anything that has unique blood, if it's a loss only, then it will be unique blood, guys. If it's profit, then there is no unique blood. And bank FD, guys, is IFOS, that is 80,000. Now, guys, please look at this diagram and please tell me, is there blood requirement? Yes. Only focus on the blood requirement, guys. So in salary, is there blood requirement? No. In house property, is there blood requirement? Yes. How much is the blood requirement? 2,20,000. Do I have blood within the family? First step, no. Do I have blood outside? Am I a friendly family? Yes, I'm friendly, but I'm shy, so I can only take 2 lakhs. So let's take 2 lakhs, from which I can take 2 lakhs from here also, I can take 2 lakhs from here also, but it's better to take from salaries because business does not talk to salaries. So let me at least talk to salaries. So 2 lakh gone from here. So salaries, 2 lakh remains. Out of this 2,20,000, 2 lakh loss is adjusted. So how much loss remains? 20,000 loss remains. Alright. Now guys, go to normal business. Is this a loss? Yes. Do they have profit within the family or blood within the family? No. Can it go outside? Yes, but it cannot go to salaries. But at least can it go to IFOS? Yes, it can go to IFOS. So IFOS and house property also it can go, but house property itself is under loss. So 80,000 adjusted here. 80,000 adjusted here. How much remains? 20,000 remains. Now guys, let's check. I'm using a different ink for the third step. What about this 2 lakh? Will it go to step number 3? No, it will be taxed. What about this 20,000? Will it go to step number 3? Yes, it will be carried forward. For how many years? For 8 years it can be carried forward. What about this loss? Can it be carried forward? Yes, step number 3 again for 8 years. And what about this? This is nothing, this is 0. So what is your income? 2 lakh. These two are losses that will be carried forward. So here we go. Income is 2 lakh and 20,000 losses to be carried forward. Moving ahead guys. Same way you have to do this here also. This is Mr. B. 1, 2, 3, 4, 5. I'm going slightly faster. 45,000. 24,000. Non-speculative, that means normal business. 22,000. Speculative business. Unique blood. 4,000. Short-term capital loss. 25,000. And long-term capital gain 19,000. Guys, this is it. Let's find out. Please focus only on the losses. No losses here. Loss in house property. Within the family I cannot go, but can I knock here? I can knock here. So 24,000 gone from here. 21,000 here. But I could have knocked other places also. Yes. But guys, it's better to knock on salary only because no one else knocks on salary's door. 21,000 gone from here. So how much remains here? Sorry, my bad. Entire 24,000 gone from here. So house property is completed. Yes. So this done. Next, normal business. Is there loss? Yes. Within the family they cannot go. Next, capital gain. Is there a loss? Yes. Within the family can they go? Yes, because short term is not unique blood guys. This is short term which is not unique. So can I take 19,000 from here? Yes, I'll take 19,000 from here. So how much remains guys? 6,000 loss remains. This is over. Yes, this is over. Now guys, within the family done. Now let's see outside. I'm using a different pen. This is 21,000. This you will tax. This is over. What about normal business? Can I go outside? I can go outside. Except salaries I can go outside, but there is no one to go to. So I will carry this forward. Yes. What about this? I will carry it forward, but this only 4 years. And what about this? Yes, I will carry it forward. So 21,000 is my income and these 3 are carry forwards. So guys, here we are. 21,000 is my income and these 3 are carry forwards. This sum is only focusing on capital gain. So although we have 5 heads of income, this one only focuses on capital gain. So let's write short term capital gain 1,50,000. Next, long term capital loss 96,000. And whenever you see something unique, please mark it. Short term capital loss 37,000. Is that unique? No, so don't mark it unique. And last, long term capital gain is 75,000. These are only 4 incomes and they want to find out what is the capital gain taxable. Alright, so first only focus on the loss guys. Can this loss be adjusted? Yes. 1,50,000 minus 37, so that is 1,13,000 short term capital gain. And 75 minus 96, that is 21, I think, yes, 21,000 of loss, but that's unique blood. Can I minus this 21 from this 1,13,000? No. So 1,13,000 will be offered to tax. This win will be carried forward. So 1,13,000 and 21 will be carried forward. Guys, this is Mr. D. Again, 1, 2, 3, 4 and 5. Income from activity of owning and maintaining race horses. So this is horses, income of 75,000. Income from textile business 85. This is normal business, 85,000. Brought forward textile business loss. Guys, this is brought forward normal business but brought forward. So guys, can I put a quarantine stamp here? Yes, quarantine stamp. That means I cannot go out for 50,000. And brought forward loss from owning and maintaining race horses. So again, this is horses. Again, this is quarantine stamp. How much is that? 96,000. Guys, please understand that anything which has a quarantine stamp, you cannot go outside. So here there are two losses, both have a quarantine stamp. So here can I adjust it? Yes, 50 can be minus from 85. At least within the family I can. Yes. So how much is this? 35,000 of profit. Yes, normal business profit 35,000. And here can I adjust it? Yes. So what is the loss here? The loss here is 21 horses. So can I go and minus this horses loss from this? No, because this is unique blood. So in this way, guys, 35,000 is income and 21,000 will be carried forward, but it can be carried forward only for 4 years. Let's see how many years. Guys, already been carried forward since 1819, 1819, 1920, 2021, 2122. So it can be carried forward only for 1 more year. Always keep a check, guys, on how many years it can be carried forward. Order of Setoff. Everyone watch. Mr. E has furnished the following details: 1, 2, 3, 4 and 5. Salaries is 1,50,000. Generally, guys, salaries only house property touches. Speculation business. So this is speculation business. How much is that? 60,000 of profit. So it's not unique. Only unique is loss. Next, loss from non-speculation, that is normal business loss, 40,000. Short-term capital gain, 80,000. Long-term capital loss, but it's coming from some years back. So quarantine stamp, how much is that? 30,000. Anyways, this is unique blood. And winning from lotteries, 20,000. I know from winnings from lotteries, guys, you always, even if they're giving you net amount, you always take the gross amount. Tip number 1, never take the net amount. Net amount means after TDS. No, you need before TDS. So this 20,000 I've already put a box because I want to offer it to tax. Now let's see, focus on only the losses. How many losses? 1 loss here and 1 loss here. Guys, can I minus 40 from 60? Yes, you can minus 40 from 60. So how much will remain? 20,000 of speculation business. Can I minus this 30 from this 80? No, this is unique blood, so I can't minus it, unfortunately. So this is over. This remains here. So 1,50,000 offered to tax, 20,000 offered to tax, 80,000 offered to tax, and 20,000 offered to tax, and this carried forward. So 1,50,000, then 20, then 80, and then 20 offered to tax, and 30,000 will be carried forward. 30,000 will be carried forward. Section 80 says that if you want to carry forward your losses, you need to file your return within that specific time period. That is the end, guys. We'll now look at the questions from the back of the book. Over to y'all. Y'all get about 3 minutes to 4 minutes to solve this question, and then we will do it together. Over to y'all, please. Guys, please remember in this sum, this is income from business before providing depreciation. This is depreciation current year. You always have to take it. And remember the order in this case. Alright, I've already got an answer. Let's see how this is going to happen. Guys, this is F. Let's put 1, 2, 3, 4 and 5 lines here. Income from house property is 1,25,000. We already have to see the computed numbers. Income from business before providing depreciation, so is 1,35,000. But we have to give depreciation, so depreciation is 26. So I'm going to minus 26 here. So that is 1,09,000. Good. Then short-term capital gain, this is short-term capital gain. How much is that? 56,000. Long-term capital loss, it is basically with a quarantine stamp. How much is that? 90,000. And you know, long-term capital loss is unique blood. It will basically be carried forward unless it has its own pipes. Income from tea business 1,20,000, but 1,20,000 you can only take 40%. So normal business 48,000 is my profit. Rule 8, dividend from Indian company carrying out agriculture operations. The company can do whatever operations it wants, but as long as dividend from Indian companies, it is really taxable. So this is 80,000 of dividend income in IFOS. Current year depreciation we minus. Brought forward business loss. So 45,000 loss incurred 6 years ago. Can it be carried forward? Yes, it has a quarantine stamp. Now guys, let's start and focus only on the losses. House property has no loss. PGBP, let's see, 1,09,000 plus 1,48,000 minus 45. So it is basically 1,09,000 plus 48 minus 45 is 1,12,000. This is the profit. Can this be minus? No, it is unique blood. So this will have to be carried forward. No other loss in place. Yes, no other loss. So this taxable, this taxable, this taxable, and this taxable. Check guys, 1,25,000. 1,12,000, 56 and one more 80. This is 3,73,000 and 90,000 will be carried forward. Good guys. Both Akshat, Rinath, both of you all have given the right answer. That is good job. Now guys, it's the second question here. We'll do this together, but I want your contribution in this. I'm not even going to draw, we are just discussing it, what you can minus, what you can't. Income from salary, income. Loss from let out house property, guys. Can I set off this loss? Yes. But remember, friendly but shy. Income from sugar business, is this normal business? Yes. Loss from iron ore business, guys, is this normal business? Yes. Short term capital loss, is this normal loss? Yes. Long term capital gain, can they be set off? Yes, because short term capital loss is not unique, so you can be set off. Dividend goes in IFOS. Income received from lottery winning, no one can touch it, this will be always taxable. Winnings from card games, again this one will be always taxable. By the way, I forgot to mention, if you win card games etc, it is taxable. But what if you have any losses from card games? Sorry, the government doesn't care about that. What if you have some expenses on card games? The government doesn't care about deductions and set off from these. Agriculture income, if the income is exempt, the losses also will not be carried forward. Short term capital loss, guys, this is again short term capital loss, so this is again capital here. And bank interest, which is basically IFOS. So whatever losses are, you will set off, carry forward, and you will calculate the total income and losses to be carried forward. I'm not solving this, but this was more or less simple. Guys, this is the calculation here. I'm going on to the next one. Here we go. Everyone, again with Mr. Batra, we are again back at you all. Guys, again 2-3 minutes. We have about half an hour left. I want to finish this and I want to go to exam questions. Sir, in answer, do we just ignore exempt income or do we show and tell exempt? You can just ignore exempt income and write a working note that exempt income, this is exempt under section 10(1). Perfect. Guys, I will, if time permits and time will permit, we will also write this in fair one question just to give you an idea. But this one is over to you all. Please calculate and find out the total income and the losses that can be carried forward. 3 minutes to go for this one as well. Alright guys, I've just planted all the details here. Now let's set off, guys. Please remember that there are two quarantine stamps which cannot go outside. So there is house property loss which can be minus from salary. So salary will become 60,000, and generally no one else touches salary. So salary is 60,000. House property is done with. Yes, done with. Speculation business generally no one touches, so it is going to be carried forward. Yes. Normal business I can minus 50,000 and 60,000. Yes, but that 10,000 loss I cannot unfortunately carry forward because this is which year? Guys, loss pertains to 7 years back. So unfortunately this will expire. This will expire. Next, long-term capital gain and long-term capital loss are unique. So the 70,000 loss remains still there, but it will have to be carried forward. This short-term capital gain will be taxable. Horses I can set off with each other, but this 10,000 loss will have to be carried forward. So horses 10,000 will have to be carried forward. So let's check 60,000 here from salaries. What else? Short-term capital gain 1,40,000. Yes, so these are the only two incomes. So 2 lakh should be the total income. Guys, I hope you understood why 2 lakh should be the total income. And carry forward there is a lot. What is the first carry forward? Speculative business 60,000. Long-term capital gain 70,000 and horses 10,000. So there are 3 carry forwards here. So 60, 70 and 10, 3 carry forwards. Perfect, guys. This is the 4th question here. This is a slightly different question, question number 4. We'll discuss it in 2 minutes. I'm just checking how many more questions, guys. There are lots more questions, I think. There is 6. There is 7, there is 8. Why not carry forward of textile loss? Because if you see, the textile loss is coming from the year 13-14. So if you calculate the number of years, this is already the 8th year of carry forward. So after that 14-15 is assessment year. So financial year 13-14. So if you calculate number of years after that year, you already are in the 8th year. Alright, perfect. Guys, so there are lots of questions. Unfortunately, we'll not be able to do all the questions. What I will do is we will discuss this 4th question and then we'll have a look at examination questions, including this last time's examination question. So I'll be back. Try and read the question in the meanwhile. I'll be back in just 2 minutes and we will continue this one. Alright, guys. Looking at this question, slightly unique question, guys. Let's see what's happening here. Mr. A furnishes you the following information for the year ended 31st March 22. Yes. Compute the taxable income of Mr. A and his tax liability for the year 22-23 with reasons for your computation, assuming that he does not opt for 115 BSc. Guys, here income from plying of vehicles computed as per books. As per books of accounts, it's 3,20,000. This is books of accounts. Next, income from retail trade of garments, guys, computed as per books of accounts with a turnover of 1,35 lakhs is 7,50,000. So which room are we opening, guys? PGBP room. These are 2 businesses that he has. Next, he has brought forward depreciation. Guys, this is unabsorbed depreciation. Can you minus unabsorbed depreciation? Of course, guys, you can carry forward. It can be carried forward for X number of years. So 1 lakh I will minus unabsorbed depreciation. So 3,20,000 plus 7,50,000 minus 1 lakh is basically 9,70,000. So Mr. A, 9,70,000 is your total income after set off. On this you can pay taxes happily. Yes. But guys, does he have to also check 44 AD presumptive taxation and 44 AE presumptive taxation? Yes. So let's check those also, 44 AD and 44 AE. First, income from plying of vehicles, we have to check under 44 AE. What is it? He has 5 light goods vehicles throughout the year. So 7,500 into 12 into 5 is 4,50,000. As per 44A, it's 4,50,000. As per this is 3,20,000. Which one can I take? I can take the lower one, but you know, guys, the drill. You have to maintain your books of accounts and get them audited. As per this, it is 7 lakh 50. If you calculate as per 44 AD, in case of 44 AD, guys, you'll have to split the turnover. Some turnover, 10% of the turnover is in cash. So on 10%, you'll get 8%. And on the remaining, you'll get 6%. I'm just going to take the final number from here. Guys, if you do that calculation, 44 AD calculation, which is here, 44 AD calculation, 8,41,340. So I'm just picking it up from here, 8,41,340. Again, guys, can I take 7,50,000? Yes, you can, but again, you have to arrange your accounts and get your books of accounts audited. And this 1 lakh, guys, can I set off? They say that once you've calculated 44 AD, you have taken all the expenses in PGBP, guys, and unabsorbed depreciation is section 32(2). If this was set off like a loss, etc., then I could have minus, but this is unabsorbed depreciation. So can I minus this 1 lakh in presumptive taxation? No, guys. I'll repeat this one last time. Presumptive taxation says that we've presumed all your expenses. We've assumed all your expenses, including 32 section. Yes, all PGBP expenses. So unabsorbed depreciation, can I minus from here? No, I can't minus from here. So 4 lakh 50 plus 8 lakh 41,340, which is basically 12 lakh 91,340. If this guy comes to you, you will recommend him to do this, get his books of accounts maintained, and tell him to audit also. So guys, this is your answer. Just check. 9 lakh 70. Of course, we've not done tax calculation, but that is something that we will do in last chapter, computation of income and tax liability. And this one is 12 lakh 91,340. Did you deduct depreciation here? No, you can't deduct depreciation because all of that has already been assumed and taken care of. Now, guys, I'm skipping the remaining questions because these are fairly simple questions. I've not even highlighted them for a reason. I'm going to now take up examination questions for the last few years and we'll see how that we can do. So here it is, exam papers. We'll take the first May paper and we'll score the marks required in the May paper first. Let's go to the set off and carry forward sum, guys. How do you identify that sum? That sum will have a lot of losses. Here we go. Mr. Harsh furnishes the following particulars. Compute the total income and show the item eligible for carry forward. Guys, 1, 2, 3, 4, 5. Guys, do you want to try this first? Take 2 minutes, try this so that we can discuss it slightly better. Yes, please do that. Take 2-3 minutes. Just make up your mind. Even if you don't get final numbers, just read it once by yourself. Alright, let's do this, guys. Salary received from a partnership firm. Here is the first mistake someone would make. They would take salary and they would put it under salaries, but hold on, guys. This is from a partnership firm. Yesterday only we discussed that this will be under PGBP. It will be a normal business. Yes, normal business, 8,50,000. And guys, if the partnership firm was only allowed 8,20,000, then you would also have only 8,20,000. Same to same. That's the shortcut. Loss on sale of shares listed in the stock exchange held for 18 months. We haven't discussed that, but guys, this any listed securities, if held for more than 12 months, they become long term. So this is long term capital loss. This is 6 lakhs. Unique blood, yes, very much unique. Long term capital gain. So this is long term capital gain. How much is that? That is 5 lakh. Not unique because, guys, this is not a loss. Brought forward business loss of 6 lakhs. So this is normal business loss. And this is a loss which has a quarantine stamp because it's being carried forward from a previous year. But do we have time? Let's see. Guys, this is of the financial year 13-14. So from 14-15 to 21-22, I think we are already in the 7th year. We might go one more year. 1 second, let's check. 14, 15, 16, 17, 18, 19, 20, 21, 20. We are already in the 8th year, guys. This is already the 8th year. Loss of specified business. Guys, specified business, you know, unlimited carry forward. There's a loss of 3,50,000. Is that unique blood? Yes, that is unique blood. Just 1 second. Thank you. एक बार वापस आ जाना. Guys, this is next is loss from house property. So it is 2,50,000. This is a loss from house property. You are friendly, but you are shy. You can go up to 2 lakh outside. Income from betting 50,000, which definitely is taxable. And loss from card games. Sorry, card games, your loss is not to be considered. So this is how you will actually, now let's start solving, guys. First, go step by step, guys. House property, step 1 is not possible. Normal business, step 1 possible. Yes, 6 lakh adjusted from 8,50,000. You get 2,50,000 here. Sorry, 1 minute. 6 lakh adjusted from 8,50,000. So you get 2,50,000 of normal business profit. 3 lakh cannot be adjusted. It will have to be carried forward. So I'm putting a carry forward line here. This can be adjusted against each other. Yes. So 1 lakh remains, but this 1 lakh is a loss, which is again unique loss. So you'll have to carry it forward. Next, guys. So now 3 losses are there, which are carry forward. 2,50,000 is a loss. Can I minus from casual income, guys? No, I can't. So there is a loss here, guys. Everyone, I'm on this loss. Salary unfortunately is not there, but I can knock on any head. Yes, I can knock on any head, but maximum 2 lakhs. So long term capital gain, here there is nothing, here there is nothing, but in PGBP you have. So I'm taking out 2 lakhs and I'm removing it from here, 2 lakhs. So what remains here is 50,000, which is taxable, and what remains here is 50,000, which is carry forward. So this looks very complicated. What we will do is I'll give you a practice of how to solve this in writing. So let's try and write this question in fair, guys, so you get an idea of how this is to be written also. Everyone take a blank page and start writing this. Please write May 22 paper. Question number, this is I think question number 2B for 4 marks. So question number 2B, computation of total income of Mr. Harsh for AY 22-23 in bracket PY 21-22. You will make 1 particulars column and 2 amounts column. Guys, while we draw the diagram, we focus on losses, but once the diagram is over, we'll basically focus on the profits. So here we start the first one. Guys, the first one, this is salary received from partnership firm, that is PGBP 8,50,000. So we can start with that. Yes, we can start with that. Please write salary received from partnership firm sorry, my bad. You will write PGBP, and in that you will write salary received from partnership firm 8,50,000. Because we have to make adjustments from it, I'm keeping in the inner column less loss from, which business is it, guys? This is loss from brought forward business loss of 6 lakhs, loss from business brought forward from AY 14-15 in bracket 8th year of carry forward. So 6 lakh is what you will minus. If you want to write the section, you can write under section 72. So 2,50,000 remains here. Next, less loss from house property under section 71, because you're going outside, maximum up to 2 lakhs. So you can only take 2 lakhs of loss. So that is 2 lakhs taken here. So 50,000 remains. This 50,000, it's in a box, so I'm putting in the outer column. This is 50,000. That is your PGBP. You will write working note 1. What is that working note? That working note is about that 50,000 extra loss being carried forward for the next 8 years. Next, guys, looking at the diagram. So house property done, business done, speculative business 3,50,000, or sorry, specified business 3,50,000. You will continue in PGBP only. PGBP, loss from specified business under section 35 AD dash dash, and you can write carried forward to subsequent years 3,50,000. So this is one column, this is the second column. Guys, from the diagram I know house property is done, PGBP looks done. Now capital gain 5 lakh and 6 lakh, so we will put that across. I want to show you the presentation, how, guys, when you write capital gain, how you should present it is what I want to show you. So the next one, when you write capital gain, long term capital gain from sale of land, inner column 5 lakh. So yes, you start with profit so that you can minus the losses, less long term capital loss from sale of shares. Again, you are minusing only 5 because you can only minus how much ever profits you have, and you can write here balance 1 lakh loss carried forward under section 74. So this one also done, yes, this one also done. And then there is casual income, IFOS, income from other sources, casual income, which is in the outer column 50,000. Just checking, casual income 50,000. Loss from card games 35 is a working note. So you will take the total income here and write total income 50,000 here and 50,000 here. So total income is 1 lakh. And working notes. Guys, working note, first loss from house property, loss from house property rupees 50,000 to be carried forward under section 71B for 8 years. Working note 2, loss from card games cannot be set off under section 74A. Sorry, don't write the section, that is only for horses. So just write loss cannot be set off. Any expenses from all these cannot be. If you think logically, you'll get the answer. The government doesn't like these incomes, so these are the working notes. Guys, generally, as a habit, what you should do is, whatever is the carry forward also you should write in one working note. So you can write the working note 3. The following will be carried forward. So here, like your house property, if there's any other loss which is carried forward, like here 1 lakh is carried forward, all of them you should write. So the examiner, the person who's checking you, the moderator, should be able to know what is the income and what are carried forward. Guys, this was your May 22 paper. December 21 paper was the first and the only paper I've seen which does not have a set off sum. Otherwise, guys, every year there is a set off sum. Personally, I used to find, when I was studying at inter and final level both, I used to find set off as a very complicated chapter. I've tried to simplify it for all of you all. I hope this simplification has worked well. Please practice more sums on this. This is your trophy from ICAI, guys. Please get your marks on this question. Sometimes for 4 marks, sometimes it's also for 6 and 7 marks. I've also seen one year where this set off question is for 10 marks. The common traps are, they will give you exempt incomes. Of course, exempt incomes you don't tax, but they will give you loss from those activities. Those losses you cannot carry forward. That is one trap. Be careful about. Second trap, guys, if there is any carry forward, see how many years it can be carried forward. That is another trap which you should be careful about. Third, don't get confused with which is the loss. Even if it's on shares or land, doesn't matter. Follow your principles well and you should be okay. And always follow step 1, step 2, step 3. Always draw the diagram first in rough and then make this so that it gets much easier and much faster. Alright, so that's been my time, guys. It's 2 hours 27 minutes into the lecture. We finished a lot of PGBP sums and we finished a chapter of set off as well. Now guys, after the break, when we come back, we are diving into and swimming in the waters of capital gain ocean. It's a very good chapter, but again, sections, big chapter, yes, but we'll manage it really well. I'll give you lots of shortcuts and give you an exam understanding of what kind of questions are asked from that chapter. Any questions, always up for taking any of those. I'll see you guys now in half an hour. Thank you so much.